How do you make $1,000 per month through dividend investing? While the short answer is to say throw a ton of money into dividend stocks until they're producing $1,000 per month, there is a longer explanation that explores some of the great benefits of dividend investing that normally go overlooked. A lot of people, when they think about the benefits of dividend investing, they just think of the cash flow that they get for doing practically no work, where all you really have to do is find the right stocks, invest in them, and then you get paid each quarter in most cases, although some stocks actually do pay each month. But what goes into making $1,000 per month in dividend investing? What's the different math you need to know so you have an idea of how close you are and you can continue to track your progress? The first thing you have to do to figure out this goal for yourself is to, instead of thinking about $1,000 per month, think per year. So whatever you want to make per month, multiply that by 12. In this case, we get $12,000 per year in dividend income. The reason we do it this way is because all the dividend yields you see for your stocks are based on annual. So if you are trying to convert an annual yield into a monthly yield, that can get quite messy. It's easier to just take what you want each month, multiply by 12, and then you say, okay, I want $12,000 per year in dividend income. The next step is to divide that number by the percent yield you're going after. So 3% yield or 4% yield may be a good target. And dividend income investors may even go for a higher target, like a 5% yield, because they are looking for stocks that specifically appeal to income rather than a stock like a growth stock where you could see it skyrocket in value. But once you do that math where you take what you want per year, 12,000 per year, you divide that by the percent yield you're going after, I recommend 4%, then you will figure out how much money you need to have invested in stocks that produce that yield in order to make $1,000 each month from your dividend stocks. Now, this isn't, though, to say that you need that much money to achieve the goal of $1,000 per month in dividend stocks, because there's a lot of stuff that happens behind the scenes that significantly reduces the amount of money you need to actually hit the goal. So a few different things work here to actually decrease the amount of money you need to make $1,000 each month. The first is reinvesting. So you take all the dividend payments, and rather than take it as cash, you reinvest it into the stock. So you may get an extra 0.31 shares one quarter. You may get an extra 0.527 shares the following quarter. And you get even more shares based on what price the company is and what their dividend yield is. And typically, the more you reinvest, the more shares you're going to get each quarter as a result of the dividend reinvestment. And this is one of the reasons why dividend investors don't care as much about short-term movements in price, because if the stock goes down, that means their reinvestment nets them more shares. While the stock price goes up, they're not going to get as many shares, but that means their money increased over time. So that's why dividend investors don't really care about price as much, not valuation, just price, in comparison to a growth investor who's going to be a little more sensitive to price movement since they're not getting dividends from their stocks. But in any event, the reinvestment is going to cut down on how much money you personally have to come up with, because your stocks are helping you to hit that goal. Another big thing is dividend growth rate. This is a big one when it comes to how soon or how long it takes for you to hit the milestone of $1,000 each month through dividend investing. Because there are some stocks that in the past 5 years, they've doubled their dividend payments. So if you were receiving $500 per year from one of your stocks, and now all of a sudden they double their dividend payment over the span of 5 years, now we're talking about $1,000 per year from that same amount of shares. And that doesn't include dividend reinvestment. That doesn't include any extra money you put in to buy additional shares during that 5-year stretch. So dividend growth rate is such an important factor to consider. If you are into dividend income investing and you're looking at a stock like an AT&T, you're not going to see as much dividend growth. That's just part of the game of being a dividend income investor. But if you are able to find that good mix between maybe a 3 or 4% yielder with some 5 to 10% annualized dividend growth, the dividend growth rate can really do a great job at shaving down how much money you personally have to put into your portfolio in order to hit $1,000 per month. And not only is this going to help you with the cash flow side, but again, as the dividend grows, that means your reinvestment nets you additional shares. And the more shares you're able to bring in each quarter or each month, if you have a monthly dividend portfolio, then furthermore, you're getting closer and closer to the point where you're making $1,000 per month from your portfolio, even though you didn't put any additional money in when you relied on the dividend reinvesting and the dividend growth rate. And just to give you an idea of how this can add up, if you are making $950 per month and you have a dividend portfolio that grows this dividend by like 5% per year on average, that's just the growth rate, then you don't really have to do anything, because in the following year, you are already going to be past $1,000 per month in dividends because you factor in the growth rate and you factor in the reinvestment. So just the idea of going from $950 a month to $1,000 a month, and you don't even do anything, like that doesn't even include your own contributions to your portfolio, it goes to show how powerful dividend investing can be as you give it more time to nurture. Now, of course, getting to $950 a month, it definitely does take some capital and some time, especially if you are more reliant on the dividend growth rates and the reinvesting side. However, just know that the opportunity there does exist, where the more money you already have in dividend stocks, the more it compounds. Dividend investing is something that takes years. It's not the cryptocurrency coin that shoots up 10x in a few weeks. Dividend investing takes a lot more time, but it is also a lot safer, and you are getting some consistent cash flow. One thing to do with any stock you invest is to just make sure that they can safely pay the dividend. That's where you look at something called the dividend payout ratio, which all it really says is the stocks pay this much in dividend, they earn this much money, and you want to make sure that they are paying less in dividend than they actually earn, just because the way dividends get paid out is that companies take that out of their net income. So if you have a dividend payout ratio over 100%, that means the dividend is not sustainable. If you are somewhere under 70%, it means it's pretty sustainable. And also, the lower the dividend payout ratio, the more space there is for a company to continue raising their dividend in the years to come. But basically, the sooner you put money into a dividend portfolio, the more time you have for it to compound. So even that $1 you're able to put into a fractional share, it's not going to be life-changing, but it's going to set you on the right path. And being on that path is the most important element of eventually hitting your income goals through dividend investing. Hope you guys enjoyed this video. Let me know your thoughts in the comments, and I will see you all next time.